Hi there and welcome back to Dukascopy TV. As always at the start of the trading week, it's time for the week ahead. And joining me on the line to discuss some of the events that may shake up the market this week is Dr. Devendra Pant from India Ratings and Research. Now, to begin with, Dr. Pant, tomorrow we will have the Bank of Japan rate statement and press conference. Recently, we've seen Japanese GDP fall to 0.7% for the final quarter of 2013. Now, a rate change would be a big surprise, but what are you expecting from the press conference?
Well, the press conference will take into, the decision will be on the basis of what kind of economic scenario is building in Japan. We had seen in the recent times there has been some good acceleration to the exports growth, but looking at the latest numbers of 0.7% growth was marginally below what was expected. So based on the present scenario, the monetary authority or the government is going to take the decision which will help economy to continue on a sustainable growth path.
Now, moving on to Wednesday evening, New Zealand also have a rate statement. They're expected to be the first of the major developed nations to raise its benchmark interest rate. What do you see happening here?
There has been some instances where we had seen the emerging market across the length of the world, like from India, the Indonesia has it. So there are pressure points on the different economy based on the kind of the structure the economy is having and the kind of linkages it has with the rest of the world. What kind of capital flows are taking place and whether the currency movement, appreciation or depreciation in the desired direction. If as of now the present situation looks like there may be a rate change in New Zealand. So again, based on the macro fundamentals and its linkage with the global economy, there may be a chance that New Zealand will raise the interest rate.
And finally, on Thursday, we have retail sales data for the US. Now, we saw a contraction in January, so bearing in mind how vital the retail sales are for the US GDP, what are you expecting from this data release, and how damaging will it be if there's a further contraction?
Well, if there is a further contraction in the US GDP, it will not only hurt the U.S. economy, but at the same time it will have a far-reaching consequences on the global economy, because being the largest economy and the major driver to the global demand, there will be impact. Having said that, as the monetary authorities have already mentioned, that the quantitative easing program will continue. Most of the emerging markets have taken that into their stride, and they have tried to tweak in their monetary policies into align with the tapering off of QE. But looking at the kind of interest rate US is having, it is very difficult to have any kind of monetary stimulus which is to come out from the monetary authority. On the contrary, there will be tapering will continue. Depending on if the retail sales contracts further or slows down, the impact will be felt more on the export major economies, those who are exporting to US economies like China and some of the other economies. If it has an impact, it will have some impact to the capital flows, which is going to the rest of the world. All in all, will be a contraction or slowdown of retail sales will be a major dampener for the global economy.
Thank you very much for talking to us today, Dr. Pant. Make sure you stay tuned to Dukascopy TV throughout the week as we cover all of these events and more. Thanks for watching. Goodbye.